Your money, your future. All right, folks, let's talk retirement. You know, those golden years when you can finally kick back and relax. Now, saving for retirement might seem like a long way off, but trust me, it sneaks up on you. That's where IRAs come in. Think of an IRA like a special savings account designed specifically for retirement. IRA stands for Individual Retirement Account. With an IRA, you put money aside regularly, and that money grows over time, thanks to the magic of compound interest. IRAs come in different flavors, but the two most popular ones are traditional IRAs and Roth IRAs. Don't worry, we'll break down the differences later. So, whether you're just starting your career or already thinking about your dream retirement, an IRA is a powerful tool to help you get there. Now let's dive deeper into the nitty-gritty of IRAs, shall we? And don't forget to subscribe, comment, like, and share this video to support our channel. Now let's talk about putting money into your IRA, or as I like to call it, stuffing your piggy bank. The IRS sets limits on how much you can contribute each year, so you can't just go throwing all your cash in there at once. For 2023, the contribution limit for both traditional and Roth IRAs is $6,500. If you're 50 or older, you can contribute an extra $1,000, bringing your total to $7,500. You can't contribute more than you earned that year. The good news is you have until the tax filing deadline to make your contributions for the previous year. Now let's talk about one of the sweetest perks of traditional IRAs, tax deductions. When you make a deductible contribution to a traditional IRA, you can subtract that amount from your taxable income. So if you contribute $6,000 to your IRA and you're in the 22% tax bracket, you'll save $1,320 in taxes. But not everyone can take a deduction for their traditional IRA contributions. There are income limits and other factors. The best way to know if your contributions are deductible is to talk to a tax professional. Now let's switch gears and talk about Roth IRAs. Unlike traditional IRAs, contributions to a Roth IRA aren't tax deductible. With a Roth IRA, you pay taxes on your contributions up front. But when you retire and start taking withdrawals, those withdrawals are tax-free. This makes Roth IRAs a great option for folks who think they'll be in a higher tax bracket in retirement. Just like traditional IRAs, there are income limits for Roth IRA contributions. If you make too much money, you might not be eligible to contribute to a Roth IRA. Section 5, Time to Cash Out, IRA Withdrawals. All right, let's fast forward to the good part, retirement. You've worked hard, saved diligently, and now it's time to enjoy the fruits of your labor. But hold your horses. There are rules about when and how you can withdraw money from your IRA. You generally can't touch your IRA money without penalty until you reach age 59(1)(2). If you try to withdraw money before then, you'll get hit with a 10% early withdrawal penalty on top of your regular income taxes. Once you hit 59(1)(2), you're free to withdraw money from your traditional IRA penalty-free, but you will have to pay taxes on those withdrawals. With a Roth IRA, you've already paid taxes on your contributions, so withdrawals in retirement are tax-free. This is one of the biggest advantages of Roth IRAs, especially if you think you'll be in a higher tax bracket in retirement. Remember, patience is a virtue, especially when it comes to your retirement savings. Section 6, early bird gets the penalty. Exceptions to the 10% rule. While it's generally best to leave your IRA money alone until retirement, life happens, and sometimes you need to access those funds early. The IRS understands that, so they've carved out some exceptions to the 10% penalty. For example, you can withdraw money penalty-free for certain qualified education expenses like college tuition or fees. Another exception is for first-time home buyers. You can withdraw up to $10,000 from your IRA penalty-free to help with the purchase of your first home. It's always best to consult with a financial advisor or tax professional to see if you qualify for any of these exceptions before you make a withdrawal. Section 7, rollover, moving your IRA around. Now, let's say you're not happy with your current IRA provider. Maybe their fees are too high or their customer service is terrible. Don't worry, you're not stuck with them. You can actually move your IRA to another provider without incurring any taxes or penalties. This is called a rollover. There are two main types of rollovers: direct rollovers and indirect rollovers. With a direct rollover, the money goes straight from your old IRA custodian to your new IRA custodian. An indirect rollover is a bit trickier. You receive the money from your old IRA and then have 60 days to deposit it into your new IRA. If you miss that 60-day window, the IRS will consider it a distribution and you'll get hit with taxes and penalties. Section 8. Penalties ain't no joke. Avoiding costly mistakes. The IRS takes IRA rules very seriously, and they won't hesitate to slap you with a penalty if you mess up. For example, if you contribute too much to your IRA, you'll have to pay a 6% excise tax on the excess contribution. Another costly mistake is missing the deadline for taking your required minimum distributions, RMDs, once you reach age 73. RMDs are the minimum amount you have to withdraw from your traditional IRA each year, and if you don't take them on time, you'll face a hefty 25% penalty on the amount not withdrawn. The best way to avoid penalties is to familiarize yourself with the IRA rules and stay organized. And if you're ever unsure about something, don't hesitate to ask for help from a financial advisor or tax professional. Section 9, the bottom line, securing your financial future. So there you have it, folks. A crash course on IRA rules. We've covered a lot of ground, from contribution limits to withdrawal rules and everything in between. The key takeaway is that IRAs are powerful tools for building a secure financial future, but you gotta play by the rules to get the most out of them. Don't be afraid to ask questions, do your research, and seek professional advice when needed. Your financial future is in your hands, folks. Take control, make smart choices, and enjoy those golden years to the fullest.